If you've been feeling like the crypto market has suddenly gone quiet, like the hype drained out overnight, you're not imagining it. In the last 24 hours, crypto has been hit from 3 different directions: macro pressure, regulatory uncertainty, and a sudden shift in trader psychology. And while most people are watching price, the real story is what's happening behind the scenes. Because today's crypto news isn't just about red candles. It's about confidence fading, positioning turning defensive, and a market that's quietly bracing for impact. Let's break down exactly what happened, why it matters more than it looks, and what traders are doing right now that most people aren't noticing. First, the market mood has changed. Over the last day, Bitcoin and most major altcoins have continued to slide, but this wasn't a panic sell. This was something more calculated. Instead of spot dumping, traders moved into downside protection, buying puts, hedging positions, and reducing exposure quietly. That matters because panic looks loud. This looked controlled. Bitcoin failed to reclaim key resistance levels, and rather than chasing a bounce, traders started positioning as if they expect more weakness, not less. This is the kind of behavior you see when confidence erodes, not fear, but conviction slipping. And that theme shows up everywhere in today's news. Second, macro pressure just tightened. One of the biggest headlines flying under the radar came from traditional finance, not crypto. A major warning was issued about a potential large-scale equity sell-off, with analysts flagging tens of billions of dollars in downside risk in stocks. Why does that matter for crypto? Because when stocks wobble, crypto doesn't decouple. It amplifies. Risk assets move together when liquidity tightens, and right now, liquidity is not expanding. Bitcoin is still trading like a high beta tech stock, not digital gold. So when macro pressure builds, crypto feels it first, and harder. This is why even strong narratives aren't getting follow through right now. Third, the political crypto optimism is fading. A key comment dropped from a Federal Reserve official that summed up the mood perfectly. The earlier crypto euphoria tied to political expectations is starting to fade. In simple terms, the market front-ran good news that hasn't arrived yet. And now, traders are asking a dangerous question. What if the regulation we're waiting for doesn't actually help prices? That shift from optimism to uncertainty is one of the biggest sentiment changes we've seen in weeks. Markets don't crash when everyone's bearish. They struggle when bullish assumptions quietly fall apart. Fourth, a regulatory gamble behind closed doors. One of the most important developments in the last 24 hours is a high-stakes White House meeting set to take place around crypto regulation. The focus? Stablecoins, yield, and who gets to control what. Lawmakers are attempting to unfreeze stalled crypto legislation. But here's the catch. Crypto may only get clarity if it gives up yield incentives, and that's huge. Because yield is one of the biggest reasons capital flows into crypto instead of staying in banks. If stablecoins are restricted from offering returns, that changes DeFi, CeFi, and on-chain liquidity overnight. This is why the market isn't rallying on regulation talks. Because clarity doesn't always mean bullish. Sometimes it just means limits. Fifth, an uncomfortable story resurfaces. Another headline making waves involves newly surfaced documents that highlight early ties between controversial figures and crypto's earliest investment circles. Now, this doesn't change the fundamentals of Bitcoin or blockchain, but perception matters, and headlines like this feed into a broader narrative regulators already believe that crypto grew too fast, too loose, and too unchecked. Even if the tech is clean, the optics are not. And in a market already struggling for momentum, this kind of news doesn't help. Sixth, XRP does the opposite of everyone else. While most of crypto bleeds slowly, one asset stood out: XRP. Against market weakness, XRP posted a strong rebound, and traders immediately started asking why. The answer appears to be institutional positioning, not retail hype. Large players have been accumulating while volatility stays elevated, suggesting this move wasn't emotional, it was strategic. But here's the important part. When one asset diverges sharply from the market, it doesn't mean the market is about to pump. It usually means capital is rotating defensively, looking for asymmetric setups while risk stays high. This isn't alt season behavior, it's selective survival. So what does all this actually mean? Let's zoom out. Over the last 24 hours, we've seen traders hedging instead of buying dips, macro risk increasing, not easing, political optimism cooling, regulation offering limits instead of fuel, capital rotating instead of expanding. That's not the setup for explosive upside. That's the setup for chop, volatility, and patience being tested. And this is where most retail traders make mistakes. They either overtrade the noise or give up right before conditions improve. What smart money is doing right now? This is the important part. Smart money isn't trying to predict tomorrow's candle. They're doing three things. First, reducing leverage. Second, waiting for confirmation, not hope. Third, tracking liquidity, not headlines. Because the next real move in crypto won't start with excitement. It will start with boredom, low volume, tight ranges, and people saying crypto is dead again. That's usually when the groundwork is laid. Final thoughts. Right now, crypto isn't broken. It's resetting expectations. The easy optimism phase is gone, at least for now. What comes next depends on liquidity, regulation details, and macro stability. Until then, the market remains cautious, selective, and defensive. And that's not a reason to panic. It's a reason to stay sharp. Because when sentiment flips again, it won't warn you. If you found this breakdown useful, make sure you're subscribed for daily crypto news that cuts through the noise. No hype, no fake pumps, just what actually matters. See you in the next one.